Hey, what's going on, everyone? Hope you guys are having a fantastic evening. One of the things that I want to do a lot more this year is do recaps to help people kind of obviously learn and grow and do better with their own trading. I don't really care if it comes at the expense that I give away, certain information for free. Like, what the fuck do I care, right? I just want to help people, and I want to get back to that mission of helping others. And what sparked this for me is taking a much needed vacation, right, and getting recentered. And I say this and I bring this up because some of you guys may have started off on a heater with trading last year, and then it didn't go so good, and it's been spiraling down. Take time away and use that time to recenter, refocus, and get grounded again, and remember what your mission and how good of a trader you are, and do the things that are necessary to help you see clearer, right? And that's what I did. And I'm back on my main mission, which is really trying to help people out and really trying to just bring as much info as possible for you guys. So I hope this is something that you guys will enjoy. I really would like to do recaps every day that I trade so that you guys could get that feedback and you could use it as a learning tool. But in order for me to continue on, I want feedback back in return. So as this video plays and as you watch this, this may be like a 10-20 minute video. I don't know. We'll see how long this ends up going. Maybe I could get it done in 5, but I just did an IG live that was an hour. So who knows, right? But just take that time and just send me comments, right? Like, I want to be able to make improvements to help you guys. And I'm not going to know unless I get that feedback. So anyway, with no further ado, I'm going to go over the SPY trade that I took today. Okay. And my rationale and reasons why. All right. So, number one is this morning, and I think this is a good place to start, is I have to open up our watch list that I sent out today. Okay. And let me close this out and let me come over here. And so this watch list was sent out 14 hours ago on January 1st, or excuse me, January 2nd, 24, right? And the levels that I was looking for was 472.5 for a breakout to take my call trade at market open, or for it to go underneath 471 and a half at market open. So let's look at how those levels played a role today and why I did or didn't take a trade based off of these levels. Okay. So when we come over here, right? So I'm going to come over here and draw a perfect vertical line, or excuse me, horizontal line at 472 and a half. All right. And for the sake of being able to deduce the color or distinguish the color, right, I'm going to make this yellow. And this way we know, hey, this is based off of the levels that I was looking at for a pre-market. And then I have 471 and a half down here, right? So 471 and a half. And that was my level for looking to take the put trade. Okay. And so at market open, which is this first candle right here, I don't take this trade even though it broke my level. Now, why don't I take this trade? And where I'm looking at is this right here, right? This broke the level. This candle closed above that 472 and a half. So then it's like, Andrew, why didn't you take the trade when that happened? Number one, I didn't take the trade on the first candle because looking at my metrics, every time that I take that first candle trade, my success rate isn't very high. It's more of like a 50-50, and I don't really like those odds. So I personally like to wait closer for that candle to close and then trade the second candle. Now, typically, what I would do is on that second candle, as soon as that candle starts, I'm in the trade. But again, because of my metrics, which I use my data to help me build where I'm finding success, is every time I take that subsequent candle immediately, I don't have a good hit rate because it does shit like this where it goes red. So what I have started to do this year is, yes, I still like the move, but I give myself a 30-second to a 1 minute pause. This may come at a detriment in that I may miss out on a percentage of that move, but I'd rather wait and have the confidence that it is moving in that direction. And in this case, I stayed patient because, all right, number one, this 50 EMA can be a level of resistance where we see that here, right? This candle comes and where does it wick? Right at that 50 and it comes right back down. I use indicators, but I don't use indicators by themselves. I use them in conjunction with levels, volume, and the sentiment of what is currently going on, right? I'm looking at all of these different factors, volume. I'm looking at the number of sellers at this current bar. I'm looking at the flow, right? There's so much stuff that I'm looking at where it's not just indicators by themselves, but in conjunction with each other, they help paint a better data story for me, right? The more data that I can get. Now, there is this thing of analysis by paralysis. So I don't have a bunch of random indicators. My thing that I mainly focus on is EMAs because they evolve around price action, right? Price action is extremely important. And along with volume, right? So those EMAs, they are good indicators to have on your chart, at least for me. And people give me shit for using them. But hey, last year I made $10 million trading. Show me somebody else that made $10 million. Okay. Is what it is. And there's all the fucking proof on that I fucking post out there. Right. So anyway, I don't take the trade for that reason. Number one, we're getting close to the 50, but also when this candle opened, which is right here, when it came up a little bit, so it was green for a little bit, it did not break the previous candle's high. And so I didn't feel confident within the first 30 seconds or a minute that we would have continuation and we would then break the 50 and go on. So as the longer I waited, the more that this candle painted the story that this is coming back down. So then that is what kept me at bay from getting in initially once we broke this level. Now let's go to the downside. Once it broke underneath 472, I had a lot of members today that did take this trade. And from 472 down here to 471 and a half, those at the money 0 DTE contracts went from $1 to $1.30. This was a 30% move, as we can see here. And let me just let me zoom in a little bit more over here. So this is where this candle starts, right? When this one breaks underneath. So this goes from $1 at its open to over here to $1.30. That's 30%. Okay, it goes to $1.31, so it's actually 31%. Okay, so this was a 31% positive gain somebody could have made if they took that trade as soon as it broke underneath 472. I didn't take that 472 level because, again, I was looking for the break underneath 471 and a half. Now, why I was waiting for 471 and a half is that was the low that we had in pre-market. I didn't want to just take a 30% move. I wanted this to break and move like 100 fucking percent, right? Which it did later, right? So I didn't like this move. Now, the same thing happens though. Once it did break underneath that level, just like how it did for the call trade, I gave myself a few seconds to see how it would perform, right? 30 seconds to a minute. And immediately it comes back up and it tests this 9 EMA. Okay. And then it gets rejected and it comes back down. But where it closed, it still closed at the same place of where it started. So this isn't giving me enough confidence. This is instead showing me, hey, this may hold support. And then the next subsequent candle, as I give it another 30 seconds to a minute, what does it do? Close green. Okay. And then even though this closes green, I'm not looking for the call trade because earlier we got rejected. And then on this candle, guess what happens? We hit that 50 EMA and it fucking comes right back down. And where does it come down to? The level, the 471 and a half level that I had. And it holds very strong. Yes, it wicked underneath, but it held that level very tightly. Okay. So then once I saw this start to play out, I am somebody that doesn't like to stay looking at the charts all day. I don't treat trading as a job. I treat trading as a business, and not the business of teaching people, of my own business, of how I operate myself in the market. Is I treat it as a business owner versus an employee. And here's the key differences between the two. An employee is going to clock in at a certain time and they are going to leave at a certain time, and they're going to be controlled by their boss and what the corporation wants them to do. A business owner sets their own fucking rules and works with the system and their business to provide the best benefit, right? They do not let their business control them. Some people do it wrong and they become a slave to their businesses. And that I would consider you're self-employed. You're not a business owner, right? But a business owner separates themselves from the business and they put in systems in place so that the business can operate with or without them. Now, with trading, unfortunately, now there are things such as bots and stuff like that. However, actively trading, I do need to spend a little bit of time going and doing stuff. So I do have to be somewhat active. However, I can determine as the business owner how active I want to be, right? So, and the purpose of a business is two things. Number one, increase revenue, and number two, reduce waste. What is our biggest waste as traders? Time. How often, and be honest with yourself and put this, in feedback on the comments, how often have you taken a trade in the first half of the day to then take a second trade, lose your money, and spend all of the market trying to recoup your money and still end up red on the day? Where had you just taken that initial trade in the first 10 minutes, you could have gone about your day and been profitable, right? This is what a lot of traders do. And like I said, they are more employees because they're becoming a slave to the market instead of owning the market. You are in control of how you behave and react to the market. Don't let the market control you. All right. So if I'm looking at this as a business owner, I want to reduce my waste, which is time, and I want to make as much money as possible. So this is why normally for me, I like trading the first 30 minutes to an hour and being done. There are days where I'm done in the first 10 minutes, which you've seen on YouTube or live or on IG or whatever. But if this move ends up happening, which I took this call trade later, the reason being is I set up systems to help me. And one of the most important systems is setting up alerts where I can right click on this chart and make an alert based off of price, but I can also make alerts based off of studies when I could come over here and say, hey, you know what? I'm going to come over here to study, come down to edit study, and I want to tell me, I'm going to delete this and I'm going to add a condition and say, hey, let me know when the price and the close of the price is greater than or equal to a study of, and then I could type in expo for exponential moving average and the 9 EMA. So let me know when the close of a candle is greater than or equal to that of the 9 EMA. And then at that point, maybe I look to take a call trade, and then vice versa for the put trade. And maybe not the 9 EMA, but maybe I add the 20 EMA or whatever, right? So I can set alerts for price, and then I could also set alerts off of studies for both directions at the same time simultaneous, right? So like, for example, I could say, okay, let me know when the market value is 474.5 and ping my phone, and I could hit create. Now, when I go back to the chart, here's a market alert for, hey, when the market value of SPY is 474.5, I'm going to get an alert. Hey, you know what? If it drops underneath 470.5, ping my phone. So I'm going to come over here, go to create, and I'm going to say when instead of at or above, at or below 470.5, ping me, right? Now I have two working alerts based off of price. So guess what? And if you guys missed that, on the alert notification, it's sending a sound on my desktop. It's sending an SMS message to my phone, and the mobile application of Thinkorswim is also pinging me. So I have 3 different types of alerts that are coming so that I am always in the know. And because I always have my phone on me, I could be completely away from my desk, get this notification. I could be I don't know, cooking breakfast. I could be hanging out with my 2-year-old watching Mickey Mouse, and I get an alert on my phone and I'm like, oh shit, it hit my level. You know what? Let me open up my phone app and see if it's something that I want to do. Oh, hey, you know what? It is. Let me go walk to my desk and take this trade maybe. Or sometimes I may just take it from my phone, which I don't recommend if you're a beginner and if you're looking to scalp because the phone is unreliable. But I don't tend and like to scout much. I like to hang on to my trade for a period of time. So that's some ways in which I can get back my time, because what that does is by setting up those alerts, it alleviates me from having to watch the screen tick by candle, right? I can now remove myself from the business, right? And let the alerts work for me, right? So in this sense, and in this case, one of the things that I will also do is adjust based off of what I see. And what I saw was, instead of 472.5 being the level today, within the market open today, I had enough data points to show 472.7 or like 6.8 was more accurate, right? So what I did was remove this and I put my alert for right here. Okay. Is I came and I created an alert that went right here and said, okay, let me know when the market value hits around 472.67 again. Okay. And so I adjusted because I had enough data to show, hey, 1, 2, 3 candles couldn't break above that 472.6. Yes, it broke momentarily, but we never got to close above it. So let me know when this happens again. So this happened at this point. The market value hit on this candle. So I got pinged and I had enough time to come back and look at my desk, where I ultimately took the trade around this point on this green candle here, which when I got in on those calls, instead of getting in at exactly around $1, I didn't get filled to like about $1.04. Okay. So I was a little late to the party, but it's fine. And I didn't get in super early, like down here, which some people, they have strategies for that. I don't tend to do those, but in this case, I got in at $1.04 and I stayed into this trade for 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55 minutes. Now, one thing that I will do, and I got the 472 calls. One of the things that I will do is, once I take my entry, okay, in this case, $1.04, I will calculate where my first PT zone is at. And me personally, I like to take profits somewhere between 10 to 25%, depending on the volume, how quick the candle is moving in that range. So it very quickly, within the same candle, went fucking 40%. So I had took profit at 25% and I sold a portion of the contracts that I had purchased. So what I do by doing that, it alleviates stress for number one, because now I know I have secured some profit. And then number two, from a risk management strategy, instead of having a negative stop once I've gone positive, I move my bottom line to my entry. So now no matter what, even if the trade then all of a sudden goes against me, I've at least taken some off of the top and made some profit. And that leads to confidence, and that leads to profitability over time, right? And that leads to me being green on the day versus going from trying to hold the bag too long and going from a big win to back to zero, or even worse, negative, right? Trimming is very important in how I trade. Now, am I saying that's how you should do it? Everybody's different. You know, it just depends on your style. When I was trading small caps, when I was first trading, instead of trimming, what I would do is set up what is called a 2-to-1 ratio, and I would set up a 20% profit target and a 10% stop. And once it hit my 20%, I would sell everything. And I would always trade with the same amount of money, so that over time, statistically speaking, by following the law of averages, I would end up profitable. But I wasn't. The caveat there and the downfall there is, when I was settling for 20, sometimes that move would make 100, right? So now what I do is I trim and then I move my bottom line up. So once I hit 25%, I sell a portion of my contracts. How much do I sell? It just depends on how quick that happens. So sometimes it may be an eighth or a quarter of my initial position. Sometimes it may be half if it took fucking forever to hit that profit target zone. Okay. So anyway, I trim some. Then what I start to notice is 473.25 starts to become an area of resistance. Those quarter marks are psychological levels, right? 473, 473.25, 473.50, 473.75, 474, and so on and so forth, right? So once I saw that, I'm like, okay, right now, so far, 473.25 is a little area of resistance, and I see that for multiple candles, right? This candle here, this candle here, this candle here, and this candle here, and this candle here could not break 473.25. So the new current resistance is 473.25. However, one of the things that I'm also able to get out of here is that the 9 EMA for longer than an hour has been holding support, not only from when I got in, but even prior to then. So when this candle here starts to go red, I don't get out where a lot of people would get out here. And I don't get out for two reasons. Number one, I like to wait for, again, close of the candle and see how that candle is going to respond, because oftentimes I could get faked out and I don't want to get a false breakout, and I don't want to get I don't want to get taken out I don't want to get taken out when I shouldn't be getting out if this 9 EMA is holding, right? So I want to wait for the close of that candle. And number two is it doesn't come back to my entry. This comes back to about $1.11. My entry was $1.04. So there's really no harm for me to just stay patient and wait, because why? I've already trimmed some profit. So I'm already profitable no matter what's going to happen. Think about it like going to a casino. And I don't like using trading with gambling metaphors because trading is not gambling, it's very strategic. But I like using this example because it paints a picture, right? If you go to a casino with $100 and you double your money, the smart thing is to do what? Take that $100 that you came with and put it back in your pocket. Now you play with the house money. And let's say you doubled that $100 of house money. Well, the smart thing would take your $100 of profit you had earlier and put that back into your pocket. So no matter what on the day, not only are you walking with the 100 that you came in with, but you have an additional 100 from gains. Now that other $100 that you have, I could be risky with, right? It's like, who gives a fuck? It's the same concept here where I've already trimmed and I've already made my money. So who gives a fuck on the remaining contracts if it continues to make money or not? I've already made money on this trade. Fuck it. Let it ride. Let it go. Right? So, so long as it doesn't hit my rule of coming back to my entry, where at that point I have to be out. In this case, it didn't do that. Also, guess what it did? It stayed above the 9 EMA. So I stay patient. And notice these candles are hovering that 9 EMA. Guess what it does? It pushes up and it goes all the way up here to $1.79. I get it at $1.04. This goes to $1.79, where it not only hits my second PT, but my third PT to take profit. So here, $1.04 to $1.79. This is a 72% return. And my areas that I like to take profit, like I said, somewhere between 10 and 25 for the first PT, somewhere between 25 to like 50% for the second PT, somewhere between 50 to 75 for the third PT, and 75 to 100 for the fourth PT. And then anything after that, I just let that shit fucking ride. I just let it go. I'm just like, okay. And then I move my bottom line, instead of being at 0 to like 30%. So no matter what, I'm walking out with really good money. And I've already trimmed 4 ways on the way up. In this case, I've trimmed 3 ways on the way up. I trimmed between my 10 to 25% zone. I trimmed between my 25 to 50% zone, and between my 50 to 75% zone. Now I just let the rest ride. And if it continues to ride up and it hits my fourth PT, I'll trim again, and that'll be my last trim. And I just keep letting it go until it then breaks my rules of indicators or what have you. Or I feel comfortable and I have other shit to do and I'll just get out of the trade. In this case, it comes up and it comes right back down. And when it breaks underneath this 50 EMA here, which starts to happen right here, the premiums come down to $1.14. Okay. So I'm like, all right, it's looking like it's going to come down. And then once it does finally close and start to move underneath that 50, guess what? It comes back to my bottom line, which is that dollar, and I get out the remaining contracts. But I had already sold majority on the way up, so who gives a fuck? This ended up being like an $18,000 trade. I had bought 500 contracts, and I sold majority on the way up. I think I was holding like 150 contracts on the way down. So it was not really a detriment. I sold 350 at those three tiers. And that's a breakdown. Now, for me, I like this because after that first half hour, which was right here, after that first hour or so, I was kind of done. And it wasn't until 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 1 hour, 5, 10, 15, 20, 25. It wasn't until an hour and 25 minutes later where I got an alert. Guess what? That saved me time from having to look at this fucking chart for an hour and 25 minutes. I had breakfast. I spent time with my son. I got a workout in. I got to read some books, some pages from the books, right? I got to spend some time with my wife. And then I came over here and took a trade that I stayed in for 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55 minutes. But guess also what? As I'm in this trade, and once it starts to hit my PTs, I can also alleviate myself from looking, which also mentally helps me because now I'm not stressed by every single candle that's moving. I just set criteria of like, hey, for me, once I'm in and I'm making money, guess where I set an alert? Instead of setting a price alert, I set an alert off of an indicator and say, hey, if one of these fucking candles closes underneath this 9 EMA after I've already trimmed, ping my phone. Or I set a price alert over here on the actual chart where I took my premium order at and say, hey, if the price alert, and I don't want to get notified right at $1.04, I'll say, hey, if the price alert comes to $1.07 and the market value of this premium comes back to $1.07, ping my phone. Now I have two alerts. I have an alert for when I'm looking to get out on both different scenarios, one on the chart and one where I actually placed my order. Now I can remove myself, right? This helps me so much mentally because I'm not looking at the fucking screen the entire time, right? And getting candle fucked, right? I could remove myself and remove the human aspect as much as possible so that the system can work and the strategy can work, right? I hope you guys appreciate this breakdown. I didn't take the put trade, even though the put trade was beautiful, right? As soon as it broke underneath 472, this would have been a great time to trade. Even if you missed the 472 and got underneath that level that we had earlier, this ended up being, let's go look at it, from right here. This is where it finally breaks down. This is 80 cents. 80 cents, and this goes up to $1.53. That's a 94% fucking move. From right here to right here, 5, 10, 15, 20, 25 minutes, 90%, right? This move, a lot cleaner, a lot better than trying to deal with all this shit at market open. Okay, which is going to lead me to my last point. You do not need to fucking trade market open. No, I'm not saying that you shouldn't trade market open because market open is market open for a reason. You're going to have the most volatility there. With most volatility and more people trading, more volume, that means more risk. With more risk comes more reward, right? But for a beginner, especially in the market open that we had today, it's not very easy for them to deduce those very things that I just went over because they get candle tunnel vision, right? And they end up getting fucked. Like somebody probably took calls here and then got fucked on the calls. And then somebody took puts here and got fucked because it went back up. And then they got double fucked. And now they're done for the day, right? Whereas if you're a little bit more patient, you could take more of a bird's eye view and let the candles and the pattern start to work out. You could see things better. So oftentimes I tell the beginner, maybe it's really good to trade that market open so you could get experience. I would size down during that time, but look to maybe trade more of the intraday or closer to the power hour, because now you could see what is really the sentiment on the day and how people are responding to the certain levels that are out there, right? Like I could really clearly see, hey, this 472.6 today was the level, and this 471.5 today was the level. And people responded when it hit, the price hit those levels, right? And it just makes it easier, right? And the volume starts to become a little bit less, so you have a little bit more time to react, and it's a little bit slower. So, but everyone has a different profile, right? Everyone has a different risk profile. Everyone behaves differently. So that's what makes the market so beautiful, is that there's no one right way to trade, because if everyone traded the same, everyone would buy at the same time and sell at the same time, and we would go nowhere, right? So anyhow, that's my breakdown of the trades today for SPY. I'm not going to get into every other trade that we had on the watch list, like NQ and ES. What I would recommend is use this information that I just went over and then go and study those charts and see if you can start to figure out the same things that I just broke down for you here, right? Again, if you liked this video, please, like, I think this ended up being fucking 20, 30 minutes. I don't fucking know. Go and just drop me a comment in this video. Okay, give me feedback, what you liked about it, what you didn't like. Send me a DM on Instagram. If you're not following me on Instagram, go follow me. It's Stock Market Wolf. We do live trading throughout the week. If you guys want to go and join, we do a lot of free shit. So I'm not here to try to sell you, right? You could go to the website. We do free live trading on Friday. I'm going to be posting more on here, so there's going to be free information. But if you want to go and pay, you go and do that, and the description of what you are purchasing is on the site, okay? And that is at stockmarketwolf.com. I don't do Bitcoin. I'll never ask you to send me money directly or any shit like that. I only operate from my website, which is stockmarketwolf.com. And that's the same whether you want to join free or a paid membership. It is all through that site. So if you guys enjoyed this, tomorrow, what I do is I do a pre-market prep with my members within the group, and then we do live trading. And if that's something you want to be a part of, go and sign up. All right. So thank you guys for your love and support. Please drop me some feedback because I want to make better videos for you guys and put out more content for you guys. So just spend a couple minutes. Thank you guys for your love and support. I will see you on the next video. God bless and be safe.